Yep, another historic session for the stock market led by technology. In fact, the tech sector soared, and it was interesting. It was the horseman stocks from the original tech boom, Intel and Microsoft, joining the new powerhouses, Alphabet, Google, and Facebook. Now, you see this chart is amazing, right? But you may be asking, why didn't I mention Amazon? Well, that's because that stock is actually part of the S&P consumer discretionary sector. Yep. Amazon was actually joined by Netflix, another part of that sector, and drove it to an all-time high. Now, I've been combing through the data, and I've been saying for a while that the American consumer is coming back. And of course, while I think it's business that keeps me enthusiastic about the market as an investment, makes me most bullish, we've got to see the fortunes of Main Street improve, and I think that's beginning to happen big time. It's all about renewed confidence, which, by the way, is contagious. You know, the Federal Reserve calls it the virtuous cycle. But money printing, we learned from thin air, parked at big banks, never did stir animal spirits. But what's stirring them now? Well, the stock market is stirring them itself, doing extraordinarily well. Home prices. Early this week, we found out that new home average price now at an all-time high. Employment. Well, employment's getting better and better. Unemployment down very much. Signs of wage gains, they're coming on. And then there's the pulse of consumers. We got that today, right? Consumer sentiment from the University of Michigan, the final read for October, says consumers are unusually optimistic on the economy. In fact, expecting good times during the year ahead. And get this, over the next 5 years as well, without interruption. 5 years of optimism? You know what that is? That's the kind of runway that sees people start families, buy homes, make real big-time investments. So as fewer Americans live in the moment and get back to embracing the American dream, that's what the real hinges of a long-term building block are. They're going to add to the economy. They're going to really grow this economy, and it becomes a self-fulfilling prophecy. You know, I saw this newfound optimism, and it begets higher spending, it begets higher wages, higher hiring, it begets higher spending, and we saw it today in today's GDP report. It blew away Wall Street consensus. 3% growth. The Street was looking for 2.5%. Again, the key highlights there were the consumer up 2.4%. What drove that? Durable goods. Why is that important? Durable good is something that you buy that's going to last 3 years or longer. Your refrigerator, those are big-time investments. Also, domestic investment up 6%. So here's one thing I've got for you today, though, and you've got to take this with you, an investment lesson. Let's say 6 months ago you had $1,000 and you wanted to get into the market. Okay, I want to do something. And you would have bought, you had a chance you could have bought today's biggest winner, Amazon, or today's biggest loser, JCPenney. The fact of the matter is, and be honest with me, most of you would have bought JCPenney. You know why? Because you would have gotten 200 shares, all those shares, and only one share of Amazon. So today, that $1,000 investment in Amazon is up $190. If you went with JCPenney, you'd be down $420. The moral of the story is don't fret about chasing stocks or limiting your investments based on the dollar amount you have. Focus on great names, names that you know are great, rather than making the market more of a roll of the dice. It doesn't have to be that way.